Okay, let's unpack this. You know that feeling. It hits right after payday.
Oh, yeah.
You see that promising, solid number land in your checking account? A beautiful digital lump sum.
Feels good for a second.
It does. And then, seemingly out of nowhere, over days or weeks, you watch it just shrink, dissolve, vanish. It happens without you ever really seeing or touching paper money for most transactions. You're just swiping plastic, tapping your phone, clicking buttons online.
It's so easy. Too easy sometimes.
Exactly. And you start to wonder, wait, where did all that money even go? It feels like it just evaporated into the digital ether.
It's an incredibly common and frustrating experience in our modern economy. Really is.
Yeah.
The tangible connection to money that people had when cash was the primary medium of exchange, well, it's largely gone now.
Right.
When you paid with cash, you literally saw the stack of bills decrease. You felt that physical separation from your money, that visual and tactile feedback loop. It's completely absent with digital payments.
Completely. It makes you nostalgic for a simpler time, doesn't it? A time when budgeting seemed clearer, more straightforward.
Yeah, less abstract maybe.
Like that classic envelope budgeting system that many of our parents or grandparents used.
The old envelopes, yep.
They'd get paid, cash their check, divide the physical bills into actual paper envelopes labeled groceries, rent, fun money, and so on.
Very visual.
And when the money in an envelope was gone, it was gone. That seemed so simple, so real.
It had hard limits built right in.
But let's be honest, carrying envelopes stuffed with hundreds or thousands of dollars today, it's completely impractical, even risky in today's world.
Oh, absolutely. Trying to manage all of life's expenses from your mortgage payment to online shopping with physical cash stuffed into envelopes, it would be a logistical nightmare.
Seriously.
And it poses serious security risks. The world has, moved on.
Right. But here's the fascinating part. What if you could take that core, powerful philosophy of the old school cash envelope system?
The intentionality, the clear boundaries.
Exactly. The visibility. And fully bring it into the 21st century. Adapt it perfectly for our cashless digital lives, using the very tools that sometimes make money feel so intangible.
Now that's the interesting idea.
That's precisely what this deep dive is all about. The digital envelope system.
It's a truly insightful reinvention, isn't it?
Yeah.
It's taking a budgeting strategy that was born out of the practicalities of a cash-heavy era and reimagining it completely for a digital-first one, leveraging technology rather than being hindered by it.
And our mission today is to sift through the stack of sources you've provided. We've got articles, app reviews, forum discussions, even some intriguing research findings.
Lots of good stuff in there.
Yeah, to pull out the absolute most important nuggets for you, the listener, we want to give you a really clear, actionable picture of exactly what this digital envelope budgeting is.
What it actually looks like in practice.
Right. Understand why it's not just relevant, but arguably more necessary today, and show you how real people are implementing it, whether that's through dedicated budgeting apps or even just clever strategies using their existing bank accounts.
The overarching goal here is, well, to illustrate how you can effectively give every single dollar that lands in your account a specific, clearly defined job the moment it arrives.
Giving every dollar a job. I like that.
It's key. This process fundamentally changes how you perceive and interact with your money. It makes your spending feel far more intentional.
Less accidental.
Exactly.
Oh.
And ultimately gives you a much greater sense of control over your finances, even when you never see or touch the physical cash.
Okay, so let's dive deep into this concept. To truly appreciate the digital version, we first need to ground ourselves in its origins. What was that traditional cash-based envelope system, and what was its timeless core philosophy?
Okay, let's start at the beginning. The traditional cash envelope system. Well, it's often associated with names like Dave Ramsey, who popularized it for debt payoff.
Right, I've heard that connection.
But it emerged decades ago. Its real heyday was probably in the mid-20th century, simply because that's when a much larger percentage of everyday transactions were conducted using physical cash.
Makes sense.
People often received their wages in cash or, cash their paychecks immediately.
It was just the default way of handling money for households back then.
Precisely. And the system was beautifully simple and incredibly tactile, which was its real strength.
Tactile, yeah. You felt it.
You did. The process involved calculating your total income for the pay period. Then, you would sit down and divide that total amount into different spending categories you had predefined for your household expenses.
Like what sort of categories?
Oh, the usual suspects.
Yeah.
Rent or mortgage, utilities, groceries, transportation, gas, bus fare, whatever entertainment. Maybe a small amount for clothing. The basics.
So you'd list out everything you needed to spend money on before you actually spent it.
Exactly. Proactive planning. And then you would grab a stack of physical envelopes, just plain paper envelopes. You'd label one envelope for each category: groceries, electricity bill, date night, gas for the car, whatever your categories were.
Right.
The critical next step was taking the actual cash amount you had budgeted for that specific category and physically placing it into the corresponding envelope.
Okay, so if I budgeted, say, $600 for groceries for the month, I'd put $600 cash into the groceries envelope.
That's right. Literally $600 in bills. And here's where the power and the discipline came in.
Yeah.
When it was time to buy groceries, you would only use the cash from that groceries envelope.
Only from that one.
Only from that one. If you're at the checkout and the total was more than the cash, less than the envelope, you had basically two choices. Put items back.
Ouch.
Or make a conscious decision to take cash from another envelope, fully understanding that you were then taking away from that other category's allocated funds.
That feels like a really immediate consequence for overspending in one area. Very direct.
It absolutely was. There was no credit involved, no overdraft buffer. The limit was literally the cash in the envelope. End of story. And that's the core philosophy of this system, the part that is truly timeless. Every single dollar received was given a specific job before you had the chance to spend it impulsively or, unknowingly.
There was no mysterious extra money floating around in a checking account waiting to be spent without a plan.
Exactly right. When you opened an envelope, you saw the physical stack of money dedicated to that purpose. You knew instantly and tangibly how much was left for that specific spend category. No guesswork.
That image from one of the sources picturing John, a factory worker in the 1960s, sitting down and stuffing cash into these envelopes really brings it to life.
It does, doesn't it?
He could literally see his financial plan taking physical shape in front of him.
And crucially, he could see it diminishing as he spent. That physical act of handing over cash and seeing the stack in the envelope get smaller, well, it created a powerful psychological link.
Between spending and the money disappearing.
Exactly. Between the spending action and the decrease of available funds for that specific purpose.
Yeah.
It made the cost of something feel very real, very immediate.
You were physically parting with your earned money. It hurt a little.
Precisely. That visceral feeling is something often missing today. And that core principle, assigning every dollar a job, clearly defining spending limits by category, and having instant visibility into what's left, that's the invaluable core we want to capture and replicate digitally.
Okay. But, as we've discussed, the original method, powerful as it was, just isn't practical anymore. Why does that physical cash system fall so short in our increasingly contactless digital world?
Well, the primary hurdle is just sheer practicality and convenience, let's be real.
Yeah.
Carrying around hundreds or even thousands of dollars in cash for all your monthly expenses. It's simply not how modern life works.
Nope.
You can't pay most major bills, rent, mortgage, car payments, utility bills, with stacks of cash delivered in an envelope.
Forget about it.
It's impractical for online shopping, subscription services, travel bookings. Essentially, a vast majority of today's transactions are digital.
And forget about safety. Walking around with all your liquid assets for the month in your pocket or purse, that's a massive security risk most people aren't willing to take.
Absolutely not. And beyond the personal impracticality and safety concerns, there's the undeniable accelerating trend towards a cashless society on a macro level.
Right, the bigger picture.
The sources provide some really striking data on this.
Okay.
For example, in the UK, which is often seen as a kind of bellwether for payment trends.
Okay.
Cash payments constituted over 50% of all transactions back in 2009. More than half.
Wow.
Fast forward to 2023, and that number had plummeted to just 12%.
12%. That's a staggering drop in just over a decade.
It really is. Over 3/4 of cash payments just vanished from the economy in that time frame.
Yeah.
They shifted to digital forms.
What drove that shift so fast?
It's been driven by several interconnected factors. The widespread adoption of chip and PIN technology made card payments more secure than the explosion of contactless payments.
Tap and go.
Exactly. Using cards, mobile wallets like Apple Pay or Google Wallet on phones, even smartwatches made digital payments faster and more convenient than fumbling with cash.
So much quicker.
And the sources mention that over 50% of younger generations, Gen Z and millennials, now regularly use mobile payment wallets.
It's just second nature for them. It's how they pay.
It is. And the pandemic significantly accelerated this too. Many businesses either went entirely cashless or strongly preferred digital payments to minimize physical contact.
Right, that makes sense.
We've also seen a decline in the infrastructure needed to support cash. The number of ATMs is falling. In the UK, for instance, ATM numbers dropped by 10% just between 2020 and 2022 alone.
So even if you wanted to lean heavily on cash for budgeting, it's becoming physically harder to access and use in many places.
That's the implication. The decline of cash is a powerful, ongoing trend. We are moving towards a future where relying solely on physical cash for budgeting is simply not feasible for most people.
It requires adaptation.
It absolutely necessitates adapting traditional, successful financial methods like envelope budgeting. And then there's that crucial psychological factor we touched upon earlier.
Ah, yes, the feeling of spending, or lack thereof, with digital money.
Precisely.
Yeah.
The University of Surrey study highlighted in one source directly investigated this. They found a clear difference. Cash heightens our awareness of spending.
Makes it feel real.
Exactly.
Yeah.
While digital currency tends to have the opposite effect, making it feel less significant or real. The quote you mentioned earlier is so telling.
Which one was that?
Digital money doesn't feel like spending your own money. But cash is different. It always feels like your money is decreasing when you use it.
That perfectly encapsulates the problem. Tapping a card, clicking confirm order, it's so fast, so frictionless, so abstract. There's no physical object changing hands, no immediate visual representation of your money diminishing. It just happens.
And this psychological distance, this intangible nature of digital payments can absolutely contribute to overspending and a feeling of losing control. It's fascinating that.
What's that?
Despite being digital natives, younger generations are exploring and popularizing methods like cash stuffing online.
Oh yeah, I've seen that on TikTok.
Right. Why? Because they've experienced the ease of digital spending leading to a disconnect. And they're actively seeking that tangible feeling that cash provides. They realize it helps with budgeting and discipline.
It's like they're rediscovering the budgeting benefits of tangibility that their grandparents knew instinctively.
Wow.
Yeah.
Exactly. So the challenge becomes, how do we recapture that crucial discipline, that clear visibility, and that psychological awareness of the cash envelope system?
But do it digitally.
Right. But within the reality of our modern, convenient, secure, and increasingly cashless digital world.
And that, of course, brings us to the core of this deep dive, the digital reinvention. How do we translate this powerful old-school concept into a method that works seamlessly with our phones, computers, and digital bank accounts?
Okay, so the concept of the digital envelope system is straightforward but profoundly impactful. The core idea is to perfectly replicate the strategy of the physical envelope system, but using digital tools.
Virtual envelopes instead of paper ones.
Exactly. Instead of paper envelopes and physical cash, you create virtual envelopes or categories or segregated funds using budgeting apps, software, or even specific features offered directly by your bank.
So the money might technically still be in your main checking account or maybe split between a couple of accounts.
Could be.
But in your mind and within your budgeting tool, it's compartmentalized as if it were in separate envelopes.
That's the essential mindset shift. You're imposing that physical structure and discipline onto your digital funds. And the non-negotiable rule from the original system is retained.
Which is?
You only spend what you have allocated to that specific digital envelope or category, period.
So you check the app first.
You check the dining out digital envelope balance before you go out to eat. And if it's empty, you either don't go or you consciously decide to move funds from your fun money envelope, making a deliberate trade-off.
That adaptability within the structure sounds key. You're not totally locked down.
It is. And this digital approach is particularly well suited for managing finances in today's economy, especially for people with variable or unpredictable income streams.
Like solopreneurs, freelancers, gig workers.
Exactly. Small business owners, too.
Yeah.
The Bizit source specifically highlights how the digital envelope system shines here. Traditional static budgets often rely on assuming a fixed monthly income, which just doesn't work when your income fluctuates month to month.
Yeah, that's a huge problem for many people.
Right. Digital envelope budgeting, however, is inherently adaptive because you allocate the money you actually have in hand right now.
So you're not budgeting with hypothetical future money. You budget what you have.
Exactly. When income hits your account, whether it's a client payment, a project fee, or your regular salary, the very first step is to immediately assign every single penny to a specific digital envelope.
Don't let it sit there unassigned.
Right. This forces you to work with the reality of your current funds and ensures that every dollar has a clear purpose from the outset.
It gives that incoming money a job right away.
Precisely. Whether that's setting aside funds for estimated taxes, allocating money for specific business expenses like software subscriptions or marketing, funding personal savings goals, or assigning money to variable spending categories like groceries or entertainment, you know exactly what's available for each purpose within its virtual envelope.
Okay. And just like the digital method solves the practicality issues of physical cash, it also brings a whole host of new benefits that the old system simply couldn't offer, right?
Absolutely.
Why do digital envelopes work so well and in some ways even surpass the original?
This is where the modern approach really shines. The sources detail several powerful advantages. First and foremost is just unmatched convenience and accessibility.
Ways with you.
Right. Your budget isn't tied to physical envelopes stuck in a drawer at home. It's with you constantly, on your phone, tablet, or computer. You can access it anywhere, anytime you have an internet connection.
That means you can check balances, lock spending, or make decisions on the fly. No excuses.
Absolutely. Which leads directly to the next benefit: real-time tracking and insights.
Instant updates.
Exactly. With digital tools, you see your envelope balances update instantly after you log a transaction. Or if you're using an app or bank that syncs automatically, you might get instant notifications for purchases.
So you always know where you stand.
Right. This provides immediate, up-to-the-minute awareness of exactly where you stand against your allocated funds in each category.
That immediate feedback loop is much faster than manually checking a cash envelope, for sure.
Miles faster. And this real-time clarity inherently fosters intentional spending. Well, just like seeing the shrinking cash in a physical envelope provided a natural break on spending, seeing the digital balance in a category decrease may be represented by a progress bar changing color in an app like GoodBudget.
Yeah, the visual cues.
It serves as a powerful visual cue. If your coffee shop envelope is nearly empty, you see that clearly. This makes you pause and consider if that spontaneous purchase aligns with your budget's plan. It directly links your spending action to its impact on a specific budget category.
It makes the budget constraints visible right at the point of purchase, potentially.
Exactly. It helps prevent relying on willpower alone and uses the system itself as a guardrail. Another major benefit is simplified planning for infrequent but often large expenses.
Oh, like taxes or insurance.
Exactly. Think quarterly estimated taxes, annual software subscriptions, insurance premiums, holiday shopping, maybe saving for a new computer, things that don't hit every month.
Those can really throw off a budget.
They can. But instead of being hit with a massive bill and scrambling, you can easily allocate a small, manageable amount to a dedicated digital envelope for that expense each payday or month. Just chip away at it.
So when the big bill arrives, the money is just there, waiting. No stress.
Precisely. It smooths out your cash flow for those bumpy expenses, makes them predictable.
That sounds really useful. What else?
Enhanced security is also a factor, though it's important to be realistic, as we discussed.
Right, digital risks exist too.
They do. While putting all your cash in physical envelopes at home carries the risk of physical theft or loss, reputable digital budgeting apps and banking platforms offer sophisticated security features. Things like encryption, multi-factor authentication, 2FA, and fraud monitoring that cash lacks.
Though, as the M1 source correctly points out, you still need to do your homework. Choose reputable services, understand the risks, like data breaches or tech issues.
The very important distinction to make. You need to be smart about it. Syncing capabilities are another huge plus, especially for joint finances.
Budgeting with a partner.
Yes. Many digital tools, like GoodBudget or some bank platforms, allow you to share your budget and individual envelopes across multiple devices or with a partner or family member.
This makes managing household finances together much more transparent and collaborative, I bet.
Definitely. No more, where did you spend all the grocery money? Arguments. Hopefully.
Hopefully.
It puts everyone on the same page with shared visibility. Digital tools also offer incredibly detailed spending analysis that's impossible with cash alone.
Reports and graphs.
Yep. You can generate reports, visualize spending patterns with graphs, and gain deep insights into your financial habits over time. GoodBudget Plus, for instance, apparently retains up to 7 years of transaction history.
Wow, that's long-term data.
It allows for real long-term trend analysis. Envelopes specifically focuses on goal tracking and progress visualization.
So you can see not just where your money went, but identify recurring patterns, discover forgotten subscriptions, pinpoint areas where you consistently overspend or underspend.
Exactly. This directly informs adjustments and improvements to your budget. And tied into this is the ability to easily set and track specific financial goals.
Like saving for a down payment.
Right. Whether it's building that emergency fund, saving for a down payment on a house or car, or aggressively paying off debt, as mentioned in the Journey Financial Wellness Source digital systems, make these goals tangible steps within your budgeting process. You assign money directly to the goals envelope.
It moves them from abstract wishes, like I want to save more, to concrete destinations for your dollars.
Absolutely. And finally, the customization of categories is far more flexible than with physical envelopes.
You can get really specific.
You can tailor your digital envelopes to meet incredibly specific needs, whether it's highly granular personal categories or detailed business expenses like software subscriptions, specific project budgets, or tracking spending per client as the visit source notes.
Trying to do that with physical cash envelopes for a business would be pure chaos.
Complete chaos.
Yeah.
Impossible, really. So you truly get the foundational discipline and clarity of the old system,
The good parts.
combined with layers of modern convenience, real-time insight, collaborative potential, security features, and deep customizability that the original method could never provide. It's kind of the best of both worlds.
All right, that makes a really compelling case for why digital envelopes are powerful today. But how do you actually get started? If someone is listening right now and thinking, okay, I want to try this, what are the practical steps? The Visit Source provided a helpful guide, right?
It did. And the process, at its core, mirrors the physical system but is executed digitally. Step 1 is fundamental. Identify your categories.
Figure out where the money goes?
Exactly. Just like the original method, you need to define your spending buckets. This involves taking a good look at your current expenses and your financial goals. List everything out.
So essentially making a list of everything money needs to be allocated to. Bills, spending, saving.
Exactly. Think about your essential bills, rent or mortgage, utilities, insurance. Then variable expenses, groceries, gas, transportation, personal care, entertainment, dining out. And crucially, your savings goals, emergency fund, retirement, down payment, travel, debt payoff.
Be thorough.
Vary. The Visit Source gives examples like specific business expenses, software, marketing, supplies, and taxes, which are especially critical for the self-employed.
Gotta plan for taxes.
Definitely. And the Journey Financial Wellness Source offers a helpful prioritization framework. Focus on funding your absolute needs first.
Cover the essentials.
Right. Then allocate to your savings goals. And only then assign money to your wants or discretionary spending categories.
Needs covered, savings prioritized, then fund money. That's a solid order. Keeps things grounded.
It provides a clear hierarchy for your money. Okay, step 2 is crucial in the digital landscape. Choose the right digital tool or method.
This is where the tech comes in.
Right. This is where you decide how you will create these virtual envelopes. And there isn't one single right answer.
Right.
It really depends on your preferences. Things like how much automation you want, how hands-on you want to be, and where you already manage your money.
What are the main options we saw in the sources? It seemed like there were a few different paths.
There are. You can go with dedicated budgeting apps. You need a budget. Or YNAB is arguably the most well-known in this space.
Heard of that one.
It's specifically built around the give every dollar a job philosophy, which is pure envelope budgeting. It's powerful, offers forecasting, has a strong online community, but it does have a bit of a learning curve, and it's a subscription service.
So there's a cost involved.
There is. Though the Reddit thread mentions that some users find it absolutely transformative, like life-changing for their finances. And apparently, recent graduates can sometimes get a free year, which helps with that cost hurdle.
Okay, so YNAB seems to have a passionate user base. It takes commitment, maybe.
It really does. Another dedicated app is Good Budget. This one positions itself explicitly as a virtual cash envelope system.
Very direct.
Yeah. The NerdWallet review and Reddit comments highlight that it's very true to the original philosophy. A key difference is it primarily relies on manual transaction entry.
Manual entry, like you type in every purchase?
Mostly, yes, which some users actually prefer because it forces that added awareness. It supports multiple devices and users, making it good for couples, and offers free and paid tiers with different limits on accounts and envelopes, like 10 regular and 10 goal envelopes on the free plan.
So good budget is perhaps for someone who wants the digital structure, but still likes that deliberate act of logging spending. More hands-on.
Potentially, yes.
Yeah.
Or for someone starting out who wants a free option. Envelopes is another app mentioned, which kind of blends the approaches. It offers goal tracking and the ability to sync directly with your bank accounts for more automated funding of your envelopes.
Okay, so dedicated apps are one path. What about using existing banked features? That seemed popular too.
It is an increasingly popular approach, discussed extensively in the Reddit thread and other sources. Many modern banks and fintech companies are now incorporating features that allow you to create virtual envelopes, buckets, or sub-accounts directly within your existing banking platform.
All in one place.
Right. Which is appealing because it consolidates your banking and budgeting. Examples from the sources include Ali Bank, which is well known for its buckets feature within its savings accounts, lets you visually separate funds.
Okay.
SoFi offers a similar feature they call vaults.
And One Finance has pockets. That sounded interesting.
Yes, One Finance has pockets, and it's a particularly innovative implementation because you can actually link your debit card directly to a specific pocket.
Really? How does that work?
So if you set up a groceries pocket with, say, $200, you can link your card to that specific pocket. When you buy groceries with that card, the transaction pulls only from that $200 limit assigned to the groceries pocket.
Wow, that's a literal digital envelope linked directly to spending. That's clever.
It's about as close as you can get to the physical envelope limit without using actual cash. Many credit unions also offer similar sub-account features. Alliant Credit Union, for example, allows members to open up to 20 separate savings accounts under a single login.
20. That's plenty of envelopes.
More than enough for most people's categories.
Well,
BECU also offers an envelopes feature within its savings accounts. And even with standard banks that don't have explicit bucket features,
like my bank, probably.
you can still implement this system. As one Reddit user described, you can simply set up multiple separate checking and savings accounts for different categories and maybe use a holding account for income before distributing it.
So just creating separate accounts called emergency fund, car maintenance, vacation savings, etc., and manually moving money into them.
Exactly. It's a manual bank-based method for creating those digital compartments. More work, but it uses tools you already have.
Yeah.
And finally, for maximum flexibility and control, you can simply use spreadsheet software.
Good old Excel or Google Sheets.
Yep. It requires entirely manual tracking, logging everything yourself, but gives you complete freedom to design your budget and categories precisely how you want them. Totally custom.
So the choice of tool really depends on how much automation you want, whether you prefer banking integrated or separate apps, and your comfort level with manual tracking versus syncing. Lots of options. Okay. Step 3.
Fund your digital envelopes. This is where the zero-based budgeting principle comes into play, a core tenet described in the Journey Financial Wellness and Visit sources. The rule is simple but powerful. You allocate only the money you already have received.
Budget the money you have, not what you hope to get.
Precisely. When your income arrives, the very first step is to immediately give every single dollar a specific job by assigning it to an envelope or category. Don't let it sit unassigned in your main account. Direct it immediately. Put it to work. Precisely. You prioritize funding your essential needs. First, your bills, utilities, basic living expenses. Then you immediately allocate funds toward your savings goals. Only after your needs are covered and savings are prioritized do you assign money to your wants or discretionary spending categories.
Needs, savings, wants. Got it.
And the critical rule, derived from the cash system, applies. You only spend from envelopes or accounts that have available funds for that specific purpose. If the digital envelope is empty, spending stops.
Every dollar has a purpose, and there's no leftover money just sitting around waiting to be spent accidentally.
That's the key. Any surplus shouldn't just hang out. It should immediately be assigned a job, typically towards a savings goal or paying down debt faster. The YouTube source offers a very practical illustration of this funding process using multiple accounts.
How did they suggest doing it?
It suggests having a primary checking account, account 1, where your income is first deposited. From there, you pay major, often fixed bills, and perhaps keep a small buffer. Then, you transfer the bulk of your income to a separate savings account, account 2, designated as your main envelope holding account.
Okay, so most of the money moves to account 2.
Right. And then within account 2, or using a budgeting app linked to it, you would internally allocate the funds to your various digital envelopes or sub-accounts.
Ah, so account 2 holds all the category money. And what about that idea of a reloadable Prepaid debit card. That sounded like an interesting tactic.
That's a strategy suggested specifically for those variable spending categories where it's really easy to overspend things like groceries, gas, or general shopping, maybe dining out.
The tricky ones.
Exactly. At the start of your budget period, for example, monthly or biweekly, you load the exact budget amount for that category onto a reloadable prepaid card. Let's say $400 for groceries. The spending limit for that category is then literally the balance on the card. When the $400 on the card is gone, you can't spend any more in that category until you reload it.
Which means taking money from another envelope.
Right, if you choose to do so, making a conscious trade-off. Or you wait until your next funding cycle. It very effectively simulates the hard stop of running out of cash in a physical envelope.
That makes the limit incredibly tangible, even in the digital space. I can see how that would work. Okay, so define categories, choose tools, fund immediately based on what you have, and then what? Step 4.
Step 4, monitor and adjust regularly. This is crucial. This is not a system you can set up once and just forget about. It requires ongoing engagement.
Got to stay on top of it.
You do. The Visit Source recommends checking your envelope balances frequently, at least weekly is a good rhythm, or even after any significant transaction. You need to be prepared to review how you're doing against your plan.
See if reality matches the plan.
Exactly. And potentially move funds between envelopes if your priorities change during the month. Life happens, right? For example, if you realize you over-allocated to entertainment and now need more money for an unexpected car repair,
Oops.
you'd consciously move funds from the entertainment envelope to a car maintenance envelope in your app or spreadsheet.
It's about making the budget a living, breathing tool that adapts to life, rather than a rigid, unbreakable plan that you just abandon when something unexpected happens.
Exactly. Flexibility within the defined structure is key to long-term success. Some apps can automate parts of this monitoring and adjustment by integrating with your bank or invoicing system.
Like auto-categorizing transactions.
Potentially, yes, or alerting you to low balances. But even with automation, regular manual review is crucial for staying connected to your finances and making sure the plan still makes sense.
So the practical steps are clear. Define categories, choose your tool, fund immediately using zero-based principles, and monitor adjust regularly. It requires conscious effort and consistency. Okay. Speaking of the psychological aspects, we talked earlier about how digital money can feel less real than cash. How do digital envelopes help bridge that gap and make spending feel more tangible, even though you're only interacting with numbers on a screen?
This is one of the most important psychological challenges that digital envelope budgeting really helps address. As that University of Surrey study in the UK source pointed out, digital payments can feel abstract, almost fake sometimes, leading to a disconnect from the reality of spending your actual money.
Yeah, it just feels like numbers changing.
Right, and the renewed interest in cash stuffing among younger generations clearly demonstrates this desire for tangibility, for feeling the money.
So how do we get some of that feeling of money disappearing without the physical cash? How do digital envelopes achieve that?
Well, the digital envelope system combats this intangible feeling in a few ways. It creates artificial scarcity and visual clarity within the digital realm. Firstly, the act itself of assigning every dollar to a specific envelope upon receiving income forces you to consciously decide its purpose before spending.
The planning step.
Right. This is a deliberate, tangible mental step that replaces the physical act of sorting cash into envelopes. You're actively directing the funds.
You're telling the money what to do rather than just having it sit passively in an account waiting to be spent.
Precisely. Secondly, the visual representation provided by most digital tools helps immensely. Seeing a dedicated digital envelope or bank sub-account balance.
Like a progress bar or just the number?
Exactly. Perhaps represented by a colorful bar or a clear numerical count in an app. It replicates the visual feedback of a physical envelope diminishing. Seeing that $87.50 left for dining out balance and watching it drop with each purchase logged or notification received is far more concrete and impactful than just seeing a large, undifferentiated checking account balance that doesn't tell you how much is allowed for dining out.
It gives structure and limits to the money, even though it's all ultimately digital. It breaks it down.
Yes, it creates psychological boundaries. Knowing you only have a specific amount budgeted for a category and seeing that specific balance in its digital container is a powerful psychological trigger. It helps prevent overspending or dipping into money intended for another purpose, like rent or savings. It provides that internal break that the undifferentiated main account balance lacks.
Okay, that makes sense. Are there specific simple digital habits that can enhance this feeling of tangibility and awareness even more?
Absolutely. One crucial habit, highlighted implicitly across the sources, is logging transactions immediately.
Right after you spend?
Right after. Using the mobile app for your budgeting tool right after you make a purchase reinforces the connection between the spending action and the specific category it came from. It's the digital equivalent of physically taking cash out of the right envelope at the point of purchase.
Ah, okay.
This prevents forgotten entries that distort your budget later and keeps your financial awareness high in real time. You feel the impact on the envelope right away.
That active step of recording replaces the physical act of handling cash, in a way.
Right. And the UK source offers another simple yet powerful strategy. Enable notifications from your banking apps.
The little pop-ups.
Yep. Getting a pop-up alert on your phone every single time a transaction clears your account, whether it's a $5 coffee purchase or a $50 online order, helps make digital spending feel more immediate and tangible. It's a constant, undeniable reminder that money is leaving your account.
Yeah, those can be jarring sometimes, which is maybe the point.
Exactly. And as a bonus, it's also an excellent way to spot potential fraudulent activity instantly. If you had a notification for purchase you didn't make, you know right away.
Good point. So, by deliberately engaging with the digital tools through assigning funds, visualizing balances, immediate logging, and enabling notifications, you actively recreate some of that psychological awareness that was inherent with physical cash. It requires building new habits, though.
It's absolutely about consciously building digital habits that provide the same discipline and awareness as the old physical ones, just adapted for today's world.
Okay, so once the basic system is in place and those core habits are forming, how can people leverage digital tools for more advanced strategies, especially for, say, solopreneurs, freelancers, or small business owners who might need to integrate this with their work? The Visit source touched on this, right?
It did. And this is where the digital system truly unlocks capabilities far beyond the original cash method. You can move beyond simple tracking and utilize the advanced features often built into these budgeting apps and platforms.
Like what?
Well, use the goal-setting tools to actively track your progress towards saving for specific business milestones or aggressively paying down business debt. Run detailed reports and use the spending analysis features to get granular insights into where your money is going in your business.
Like identifying which client projects are costing the most in terms of specific expenses, maybe? Or which marketing efforts are paying off?
Exactly. Or pinpointing which marketing channels are consuming the largest portion of your budget. Or seeing how software subscription costs are accumulating over time. This level of analysis is crucial for making informed business decisions, not just tracking personal spending.
Definitely.
And for solopreneurs and small businesses, integration with other SaaS, software as a service, and productivity tools is a significant advantage, as the Visit source emphasizes.
Why is that integration so important in a business context? Seems like extra complexity.
Because your budget and finances shouldn't operate in a vacuum, separate from your actual work. When your budget is integrated with your workflow, your financial decisions can be directly aligned with your project priorities and deadlines.
Ah, okay. Connecting money to tasks.
Right. If you have team members, the budget constraints for a project become visible and actionable within the tools they use every day. You can tie budget usage to specific project tasks, milestones, or client deliverables.
It turns the budget from just a static financial report into a dynamic tool that informs day-to-day operations. Much more useful.
It absolutely does. The Visit source provides examples of how you can achieve this integration. You can use automation tools like Zapier or Make.
Those connection tools.
Exactly. These are services that allow different software applications to talk to each other automatically. You could connect your budgeting app, like Y&E, to project management tools like Trello or Asana, or calendar apps like Google Calendar.
How would that work?
Well, you can set up automated reminders to send invoices when a project milestone is marked complete in Trello, or get a reminder in your calendar to review a specific budget category before a recurring bill is due.
So the system prompts you, rather than relying solely on memory or manual checks. That's helpful.
Precisely. You can create synced dashboards in collaboration tools like Notion, pulling data directly from spreadsheets or linked services, so your key financial metrics are visible alongside your other business KPIs, all in one place.
A command center, sort of?
Kinda. And you can potentially automate transaction syncing from invoicing or accounting software like QuickBooks or Xero directly into your digital envelopes, automatically categorizing income and expenses based on rules you set up.
That sounds incredibly powerful for automating the busy work and ensuring accuracy, especially for business finances.
It significantly reduces manual effort and the chance of errors. For immediate awareness, you could even set up integrations that send real-time notifications to team communication platforms like Slack when an envelope balance for a project dips below a certain threshold, prompting discussion or reallocation right away.
That's proactive financial management baked right into your team's communication flow. Very cool.
Exactly. For advanced use, you can go even deeper with categorization by using tags or creating sub-envelopes organized by specific client codes, project names, or service offerings.
Wow.
This allows you to track the profitability and spending associated with each individual engagement, ensuring you're staying within the resources allocated for that specific piece of work.
That level of granularity is completely unfeasible with physical cash envelopes.
Yeah.
It gives you real business intelligence, not just budgeting.
It does. It transforms budgeting into a truly live, breathing operational tool, as described by Bizet, directly connecting your money management to your business mission and day-to-day operational needs. And on a personal finance level, the M1 source suggests using your digital envelope system to not only allocate funds for spending, but also for accelerating broader financial goals, like consistently allocating money for investing or making extra payments towards debt, seamlessly integrating your budget with your long-term wealth-building strategy.
So it's not just about controlling spending, but also intentionally directing money towards growth. It sounds like once you get the basic system down, the digital tools offer a vast landscape for sophisticated financial management, both personal and business.
They really do.
Now let's talk about something less positive, but very real. Budget failure. Many people try budgeting, get frustrated, and eventually give up. How does the digital envelope system specifically address common budgeting pitfalls that cause people to fail?
That's a crucial point, because the sources indicate that many traditional budgeting methods fail precisely because they are too rigid or lack the inherent visibility and discipline that the envelope system provides, whether it's the physical or the digital version. The digital envelope system directly tackles several of these common pitfalls.
Okay, like what's one of the most frequent reasons people fail at budgeting? I know I failed before.
Pitfall number 1. Overspending in one or more categories without realizing the impact until it's too late. Usually the fun categories.
Yep, guilty.
With traditional budgeting that just tracks total spending against total income, it's easy for discretionary spending, like dining out or impulse purchases online, to creep up and eat into money needed for essentials or savings goals.
It all just comes out of the main pot.
Right. The digital envelope system directly solves this with a clear, visible limit within each virtual envelope. If your dining out envelope balance is low or empty, you see that before you spend or right after. It prevents unplanned debt or taking money needed elsewhere. The boundary is clear and enforced by the system's design.
It makes you accountable to your own plan in the moment. Less wiggle room for accidental overspending.
Yes. Pitfall number 2, which is especially relevant for people with fluctuating income, and that's an increasing part of the modern workforce.
Freelancers, gig workers, again.
Right. Guessing future income and budgeting based on money you hope to receive. Many traditional budgets assume a fixed monthly salary, which just doesn't reflect reality for many.
Yeah, that's a recipe for disaster if the income doesn't show up.
It is. Envelope budgeting, particularly the zero-based funding principle we discussed from the Bizet and Journey financial wellness sources, only allows you to budget money you have already received. What's in the bank now?
Budgeting based on reality.
Right. This makes the system inherently responsive to variable income and eliminates the risk of budgeting funds that never materialize, which is a common source of stress and budget failure. You can't spend money that isn't in your virtual envelope because you haven't allocated it yet.
Okay, that makes sense. What else?
Pitfall number 3, lack of clear visibility across different accounts and spending types. Without compartmentalization, money in a large checking account can feel like one big pool, making it hard to know exactly how much is allowed or safe to spend for different purposes. It's just one big number.
Yeah, is there enough for groceries, ND, that concert ticket? Hard to tell.
Exactly. Digital envelopes solve this by clearly segregating funds by category. You get instant visibility into exactly how much is available for groceries, for utilities, for savings, etc. You can confidently say, okay, I have precisely $180 left for gas this month. This prevents money from simply disappearing into an undifferentiated account balance black hole.
That clarity must reduce anxiety significantly, just knowing where you stand.
Significantly. And pitfall number 4, a big one, budget guilt and abandonment.
The I messed up so I quit cycle.
Exactly that. Yeah. Rigid, traditional budgets can feel like a straitjacket. If you overspend in one area, it feels like you've failed or broken the budget entirely. That leads to frustration, guilt, and often just giving up on budgeting altogether. It's too hard.
Yeah, been there.
The digital envelope system, as described in its usage, is much more flexible and forgiving. You can consciously move money between envelopes if an unexpected need arises, or if you simply decide to prioritize differently this month.
So it's okay to adjust.
It's expected. This is seen as an adjustment within the system, not a failure of the system itself.
So if you need to take $50 from entertainment for car repairs, you just move it in the app or spreadsheet, and the budget adapts, rather than feeling like you've blown everything and should just stop trying.
Precisely. It makes budgeting adaptive and realistic, rather than rigid and punitive. It bends, it doesn't break. The Visit Source also offers several best practices that help avoid these pitfalls and build resilience into the system.
Like what?
Reconcile your envelopes or accounts weekly to catch errors or forgotten transactions early. Use rollover envelopes for categories where unspent money accumulates for irregular future expenses like car maintenance, medical costs, home repairs. That money carries over month to month.
Smart, so you build up a fund.
Right. Automate rule-based transfers where possible, like automatically assigning a percentage of every paycheck to savings envelopes. And crucially, keep business and personal envelopes completely separate if you're managing both. Don't mix the streams.
Those sound like key habits that build robustness into the system over time. Which brings us to the point that even with the best digital tool, success ultimately depends on behavior, doesn't it? What kind of consistent habits are needed for digital budgeting success?
You're absolutely right. The technology is a powerful enabler, maybe even essential today. But it's the consistent behavior that makes it transformative. The sources emphasize that the goal isn't just tracking numbers. It's building new financial routines.
Making it part of your life.
Exactly. It's about turning budget maintenance from a dreaded monthly chore into a regular positive financial ritual, or, as the Visit Source wonderfully puts it, cultivating a lifestyle of intentional finance. This consistency is what builds long-term stability and confidence.
So what are the key habits people really need to cultivate to make this stick?
The Visit Source outlines several fundamental habits. Habit number 1, a quick 5-minute morning check-in.
Just 5 minutes.
Yeah, just 5 minutes. Start your day by opening your budgeting app or bank accounts and quickly glancing at your key envelope balances. Did you spend yesterday? How did it affect the relevant envelope? Are there any low balances you need to be mindful of today? This simple check-in takes minimal time, but aligns your spending intentions for the day with your budget plan before you even walk out the door.
Just a brief moment to touch base with your money. Connect with it.
Yes. Habit number 2, which we touched on earlier but is worth repeating, log transactions immediately.
Right away.
Make it a rule. Whenever you spend money, whether with a card, phone, or even the occasional cash, you log it in your budgeting tool using the mobile app right away. Don't wait until later.
Why is that so important?
Because it prevents forgotten entries that throw off your balances later, and it keeps that connection between the spending action and the envelope balance immediate and accurate. Reinforces the consequence.
That sounds like it requires discipline, especially at first, but it prevents a lot of headaches and confusion later when you try to reconcile.
It absolutely does. It's the digital equivalent of reaching for the right physical envelope before you pay. Habit number 3, reflect weekly, adjust monthly.
More than just logging.
Right. Don't just log transactions passively. Periodically step back and review your progress. Once a week, maybe Sunday night, look closely at your envelopes. Where are you over or under budget? Why? What happened?
Okay.
Then at the end of the month, perform a more formal review. Roll over any unspent funds in categories where that's appropriate, like savings goals or those irregular expense funds. Rebalance funds between envelopes if necessary based on the month's reality and the next month's plan.
Plan for the next cycle.
Exactly. The Visit Source suggests tying this weekly review to an existing routine, like your weekly project review or planning session for the week ahead, to help solidify the habit.
Pairing it with something you already do makes it easier to remember. Good tip.
Exactly. And habit number 4, which is often overlooked but really important for motivation, celebrate surpluses.
Celebrate having money left over.
Yes. When you review an envelope and find you have money left over at the end of the period, especially in a variable or discretionary category like fun money or clothing, that's a win. That's successful financial discipline in action.
So acknowledge it.
Acknowledge it. Make that positive feeling tangible to reinforce the behavior. Maybe that leftover money rolls over into a fun money envelope for next month, making it even bigger. Or perhaps you consciously decide to move it to accelerate a long-term savings goal. Recognizing the success helps maintain motivation and makes budgeting feel less like deprivation.
So consistent checking, immediate logging, regular review and adjustment, and celebrating successes are the pillars. That makes a lot of sense. It's about building a routine. Of course, no system is perfect. What are some potential challenges or hurdles people should be aware of when adopting a digital envelope system? It can't all be smooth sailing.
No, it's important to be realistic. There are potential challenges, especially when first starting out. The M1 source and app reviews, like for Good Budget and YNAB, mention a learning curve.
Getting used to the tech.
Right. Getting familiar with the specific features, interface, and methodology of a new budgeting app or bank feature takes time and effort. YNB, while powerful, is often cited as having a steeper learning curve initially. You have to wrap your head around its specific philosophy.
So don't expect to be a master user on day one. Be patient with yourself.
No, patience is definitely required. The advice here is to start small. Maybe just budget a few key categories first to get the hang of it. Use the tutorials and customer support offered by the platform. And don't get discouraged if it feels awkward or time-consuming at first. It gets easier.
Okay. What else?
Another challenge can be manual input. While many apps sync with banks, transactions like cash purchases, which still happen sometimes, or using services that don't easily integrate, might still require manual logging to keep your budget perfectly accurate.
Right, the sync isn't always perfect.
No. And even with syncing, you often still have to manually categorize transactions after the import, as the NerdWallet review of Good Budget points out. The bank feed might just say Target, but you need to tell the app if that was groceries, clothing, or household goods.
So digital doesn't always mean zero manual effort. Diligence is still needed, even with fancy apps.
Yes, especially if you use cash frequently or shop at places with generic transaction descriptions. Potential technical issues are also a reality, as the M1 source correctly notes.
Glitches happen.
Software glitches, syncing errors between your bank and the app, or temporary service downtime can occasionally occur with any technology platform. It's wise to understand how to troubleshoot common issues, know how to contact customer support,
And maybe have a backup.
and perhaps maintain some form of simple backup, like exporting your data periodically to a spreadsheet, just in case.
Relying heavily on one piece of technology always carries that inherent risk, I guess.
It does. Privacy concerns are also something individuals should seriously consider, and this came up in the sources.
Sharing your financial data.
Exactly. You are potentially sharing sensitive financial data with a third-party app or service. The M1 and Envelope app privacy notes touch on this. It is absolutely essential to research the security measures a company has in place and read their privacy policy carefully. Understand exactly what data they collect, how they use it, and how they protect it.
Gotta read the fine print.
You really do. Choosing a reputable provider you trust is absolutely key.
That trust factor is crucial when dealing with your financial information. Huge.
Absolutely. And finally, just dependency on technology itself. If you become entirely reliant on one specific app or online service, you could face temporary challenges if that service experiences extended downtime, or if you lose access to your device. Phone breaks, laptop dies.
Right, what happens then?
While rare for major services, having a simple backup system, perhaps that basic spreadsheet that tracks your high-level categories and target balances, could provide peace of mind and a way to manually track temporarily if needed.
So while the advantages are huge, it's about being aware of the potential bumps in the road, the learning curve, manual effort, tech glitches, privacy, dependency, and having strategies to navigate them. It's not magic.
Exactly. Like any powerful tool, it's most effective when used thoughtfully, with an understanding of both its strengths and potential limitations.
This has been a truly insightful deep dive into the digital envelope system. Really fascinating stuff. To bring it all together, what's the single most important takeaway you hope our listener carries from this conversation?
The single most important takeaway. I think the key thing is that the digital envelope system is far more than just a budgeting method. It's a powerful framework. It's a way to bring clarity, intentionality, and crucially control back to your money in our modern, often abstract, cashless world.
It makes digital money feel more managed.
It does. It takes the proven, timeless principle of giving every dollar a specific job and makes it not only possible, but arguably more insightful, convenient, and adaptable than the original physical method ever could be.
It's about imposing structure and purpose on your digital funds, even if they all live in the same couple of accounts.
Precisely. By consciously setting up these digital envelopes, choosing the tools that fit your life, funding them immediately based on what you have, and building those simple, consistent habits of logging and reviewing, well, you create a resilient financial system for yourself.
And resilience sounds good right about now.
It does. It becomes less about feeling restricted by a budget and more about feeling empowered because you understand exactly where your money is going and what it's actually doing for you.
And that understanding leads to greater control, stability, and crucially, peace of mind, right? When every dollar has a clearly defined home and purpose, you free up mental energy that was previously consumed by worrying about where your money went or if you'd have enough.
Absolutely. It transforms budgeting from a passive, sometimes stressful, tracking exercise into an active, empowering process that aligns your money with your life's goals, whatever those may be.
Excellent points. This deep dive has really illuminated how a seemingly old-fashioned idea can be dramatically revitalized and become such a powerful tool for navigating modern finance. Now, for our listener, here's a provocative thought to leave you with, something to mull over as you navigate your own cashless world.
Okay.
Think about your next paycheck arriving digitally. Given how digital money can sometimes feel less real than cash, and knowing that assigning funds to specific digital envelopes can make spending feel more tangible, what is just one single spending category in your life right now that feels the most chaotic or out of control?
We all have one, or maybe more than one.
Probably, but just pick one. And how might the simple act of giving just that one category its own digital envelope, whether that's a named category in a spreadsheet, a dedicated balance in an app, or even just opening a separate small bank account nicknamed coffee fund, or whatever it is, how might that simple step change how you think about and manage spending in that specific area over the next month?
Yeah, consider which financial envelope you would prioritize funding first if you started today. Which one would bring the most immediate clarity and control to your spending?
Just something to chew on. We hope this deep dive has equipped you with the knowledge and motivation to explore the power of digital envelope budgeting for yourself.